Many people in Ghana and across Africa buy insurance for the wrong reason. They say things like, "I'm paying insurance, so I should get my money back," or "Insurance is an investment." That misunderstanding is dangerous. Let's be very clear from the start. Insurance is not savings. Insurance is not an investment. And confusing these three things has cost people millions. Savings, investment, and insurance serve different purposes. Let's break this down simply. Savings is money you keep aside for future use. School fees, rent, emergencies. You expect savings to come back to you. Investment is money you put into something hoping it will grow. A business, stocks, land. You expect investment to give returns, but with risk. Insurance is different. Insurance is money you pay to protect yourself against financial shock. You are not paying insurance to make profit. You are paying insurance so that a disaster does not destroy your life. Let's use a Ghanaian example. Imagine you insure your car for 1 year. You pay your premium faithfully. Nothing bad happens. At the end of the year, some people ask, "So where is my money?" But that question misses the point. You did not pay insurance to get money back. You paid insurance to avoid a large loss if something went wrong. It is like paying a security guard for your house. If no thief comes, do you demand your money back? No, because what you paid for was peace of mind. Now let's look at another common confusion. Life insurance. Many people say, "Why should I pay life insurance? I won't benefit." That thinking is incomplete. Life insurance is not for the dead. It is for the people you leave behind. If a breadwinner dies in Ghana, school fees stop, rent becomes a struggle, and families fall into hardship. Life insurance protects the future of those you love. Now let's talk about why this confusion is common in Africa. In many places, insurance is sold like an investment. People are promised returns instead of protection. Policies are bought without explanation. So when claims don't pay, people feel cheated. But the problem is not always the insurance. The problem is expectation mismatch. You expected savings. You bought insurance. Let's talk about where each tool fits. If you want money, you can withdraw anytime. Save. If you want money to grow, invest. If you want protection against loss, insure. You don't use a hammer to cut wood, and you don't use insurance to build wealth. They each have a role. This is also why some people cancel insurance too early. They say, "I've been paying for years and nothing happened." That is not failure. That is success. It means the risk did not occur. Insurance is like a seatbelt. You don't complain that it didn't save you if you never crashed. Now here's something very important. Insurance works best when combined with savings and investment. Savings handles small problems. Insurance handles big shocks. Investment builds long-term wealth. When one is missing, the system collapses. This is why risk education matters. Understanding insurance does not make you afraid. It makes you prepared. Let's bring this home. If you are a student, an entrepreneur, a worker, or a business owner, you must know what you are buying and why. Insurance is not to make you rich. It is to stop you from becoming poor overnight. This is the Risk Lens with Dennis, where we look at money, life, and business through the lens of risk, clearly, practically, and honestly. Subscribe to the Risk Lens with Dennis, because risk is everywhere, but ignorance is optional.